Good evening once again, ladies and gentlemen, and welcome to our today's conversation. We shall be discussing about exchange traded funds. And today I'm joined by two speakers, that is Shimasha and Chirag, and I'm going to give them an opportunity to introduce themselves. Then we can start off our discussion for the day. So we can start with Shima.
Hi everyone, how are you? My name is Seema Shah, and I'm the wealth manager and an equities dealer with AIB-AXYS for the NSE, the Nairobi Stock Exchange. Recently, we have started doing the foreign markets as well. So, getting into ETFs and the global stocks, as well as the indices and the gold, part of the Forex market as well. And yeah, happy to have you all on the understanding of the ETFs.
So, yeah, I'll just introduce myself for everyone who is listening to this X Space today. And we are going to talk about the exchange traded funds, ETFs in short. My name is Chirag Solanki, and I have been an investor in the Kenyan markets since 14 or 15 years ago. I have an experience of about 15 years in the Kenyan markets and about 5 years in the international markets. I do have investments in America and I have investments in India as well. And most of them are just in the stock market. I do not do real estate. That's my motto. Like, or it's my rule of not touching real estate and anything that doesn't have liquidity. And so for me, it's just the stock markets and the ETFs and the mutual funds and things that are highly liquid. And today we'll be talking about all those, and I'll be sharing you my knowledge tonight. Thanks.
Thank you, Chirag. Uh, thank you, Shima. So we can start off with you. And before we dive into exchange traded funds, you can give us a brief overview of what has been happening in the market. I understand we have had some new listings. We had the ETF, our second ETF, and also you can share some light on the recent listing of SKL in our market. Shima.
So we've had a new global ETF listing. The first one was the gold ETF, which has been trading quite well as well. We've had the second one, which is the Satrix MSCI World Feeder ETF, which was listed at the NSE. It kind of tracks the MSCI World Index via iShares, and the fund manager on the back rock is BlackRock. It's like the first global equity ETF in Kenya, enhancing a diversification and global exposure. It was listed on 16th of July, trading in Kenya shillings at 761 per unit. It actually signifies a major step in internationalizing Kenya's capital markets and deepening investment options for local investors too. The second one we saw was the introduction of SKL listing, the Sri Krishna Overseas listing. It was done by introduction in the SME segment. Um, this new listing came after a very dry period of since 2020. We've had nothing, no new listing. 50.5 million shares priced at 5 shillings 90 cents, that was listed. It's a good signal that there seems to be a renewed interest in the capital markets by the corporations, and we hope for more listings to happen. uh, the other thing that has happened is the removal of the limit of the 100 shares, so the odd lot. Now, investors can trade as little as one share, down from the previous 100 share limit. Um, this improves the accessibility and boosts the retail investors' participation. It would bring some kind of solutions to the barrier to enter. Some big stocks like BAT, which is currently priced at 400, at least a retail person could buy one share now rather than having 100 shares. There was the odd lot board, yeah, but the trading was not frequent. Plus, also the price was a bit either higher or very lower than the main what was on the main board. Yeah, those are the new things happening at the NSE at the moment. Over to you, Jos.
Thank you, Shima, for that extensive overview. Then we'll come back to you, Shima, in a bit. But
Yes.
now back to Chirag. There are some of us who are not familiar with exchange traded funds. You could explain to us maybe how exchange traded funds are structured and how they work.
Okay, yeah. So exchange traded funds are, anyway, this is very new in Kenya right now. That after having the new gold by APSA and now the Satrix MSCI World Feeder Fund, it's very new to Kenyans, but it has been there for a while now in the international markets. And if I just give you what an ETF means in the right wordings, is that it's an investment fund that is traded on the stock exchange like individual stocks, and it offers a diversified portfolio of assets, bonds, or provides flexibility and convenience to investors. So what happens is that, say for example, we have the Nasi 25 in our Kenyan market. That could be an index, right? Like we have the Nasi 25, whereby we have the 25 stocks of the Kenyan market. We could make that to become an ETF if Kenya wanted to. And so what happens in the international markets is that what they would do is that they use ETFs out of indices, or they could be using some other things, like they just put a group of stocks together. Like there is one ETF that I know is called the Mag 7, that includes seven stocks that are the magnificent seven, like the seven highly traded technology stocks. That's Nvidia, Meta, Amazon, Microsoft, Google. And so it can be having these stocks together, and that is what an ETF is made of. And another thing that I'll tell you about ETFs is that sometimes ETFs are, as they are what do you say, like they are done by the fund managers. So say for example, if one stock is not performing well, then they could just remove that stock and put another one. So it brings about some kind of diversification for those people who do not understand these markets on how to choose a stock, because you feel that maybe I want to buy this stock, it would be good for me, but what if it goes down tomorrow? Then with an exchange traded fund, you can buy this as a basket. And if you are going to buy, say, 100 stocks in that basket, and 10 of them are not performing, then you can be having about 90% of them that are performing. So your overall market, your overall returns would be up, and not like the one that you have only one stock or two stocks in your portfolio.
Thank you, Chirag, for walking us through exchange traded funds. And that was quite insightful. Now we'll come back to Shima. Now that we understand what exchange traded funds are, is there what type of ETFs do we have in the market here in Kenya and also globally, and how can investors differentiate between these different types of ETFs?
So, in Kenya, we have two ETFs, the ABSA New Gold ETF and the Satrix MSCI World Feeder ETF. Um, those are the only two that we have here. The foreign markets, actually, that's where the main big ETFs are. And there are several types that cater to different investment objectives and the strategies. Most of the common ones are like equity ETFs, like what Chirag spoke about, the Mag 7. There's some others which track a specific stock market index like S&P 500. There are other particular ones which focus on sectors of technology, healthcare. There's some also ETFs which are specified in geographic regions like USA, Europe, Asia. The other ETFs are more like a portfolio of bonds, government and corporate both. The other one, um, they're just sectorial, and this actually gives investors to target growth areas or diversify their portfolios. So you could have an ETF which is in technology, which is the fastest growing at the moment with the new development of AI and a lot of things on the tech which comes in through gaming and what's happening when you look at the healthcare. It's one of another big thing as well, even the finance, which a lot recently with the new Bitcoin and the coins, there were new ETFs which came out. Mm, Also, the international ETFs, like for us, invest in international markets like the developed ones, emerging ones, the frontier ones. You've just got to differentiate which. I know there was some kind of ETFs which were listed out there where I think there was likes of Safaricom, which was in that MSCI Frontier ETF as well. So you can diversify into many ETFs. Um, yeah, next one, please.
Thank you, Shima. You've really
Thanks.
touched on that a bit. So now, having understood what exchange traded funds are and the different type of exchange traded funds that we have here in Kenya and globally, we would like to come back to you, Chirag, and maybe because most of us are curious about this exchange traded funds, which has been introduced in Kenya. Could you walk us through this ETF? Maybe you can touch a bit on its performance, where it is domiciled, its liquidity, what are the components of these exchange traded funds, and also you can touch about the currency perspective of these exchange traded funds.
Okay, yeah. So this ETF is the I would say that the ETF is domiciled in South Africa in the Johannesburg Stock Exchange, and now they have listed it in the NSE, in our Kenyan NSE. And always, like, there's an underlying fund or an underlying stock that an ETF does follow. So for this specific ETF for Kenya, the Cetrix ETF, MSCI World Finder ETF, the underlying fund is the iShares, that is by BlackRock, core MSCI World UCITS ETF, and it has been there since 2017 in South Africa. It's not something new as an ETF that was introduced in the world, but yes, it has been there for quite a while, since 2017. It's just that it's new in Kenya right now. And so now this ETF follows the large and mid cap companies over 23 developed markets, and it covers approximately 85% of the free float adjusted market capitalization in each country. So that means that, first of all, it's out of the 23 developed market countries. And when you're looking at Kenya, which is a developing country, and then you're looking at a developed country, so you can know that that developed country has its own kind of stocks in the market that are much performing much well than ours in Kenya. And if I have to, like, okay, so the performance for the 1 year has been about 13%, and the 3 year return for this MSCI World Feeder ETF is 21%, and the 5 year return is 15%. And since it was incepted in August 2017, it has given us 15.56% per annum, that is annualized. Yeah, so that means that the compounded annual growth rate for this specific ETF has been 15.56 from since it was incepted. And it will give us in Kenya, because we will be buying it in the Kenya shilling. Remember, Kenya is our currency is Kenya shillings, and as much as this ETF is it's an international ETF. However, we will be able to buy it in Kenya shillings, as Shima had said that is going to be listed at 761 shillings, which it has already been listed in the markets. So anyone willing to buy this would be able to trade it at the listing price of 761, and then after that it will just be that the markets will follow the demand and the supply. So if there is more demand, the price will just go up. If there is a supply in the market, then the markets will start falling down, and that's how the markets are. Volatility has to be there for us to make money.
Thank you, Chirag, for that. Moving on with our conversation of the day, I would like Shima, you can shed more light on what value proposition does this particular ETF offer to investors.
Um, just one word. Diversification, diversification, diversification. Um, Most of us are so focused on the NSE, and this ETF gives you, it gives you an investment or a pathway into the global markets. Yeah. And it does offer investors a very strong value proposition, especially in the current market environment. So it gives you the diversification, like an exposure to broader basket of securities. It reduces your single asset risk and enhances portfolio stability as well. The other thing is, yeah, there is risk mitigation as well, but especially in valuable like volatile market, as it spreads risk across various holdings. But in today's current economic landscape, these features make ETFs a compiling tool for both strategic and tactical, to have it in your books as well. I think I'll take this. There was a time when in 2020, after the COVID, the NSE was very, how do I say it? There was no growth. The markets had gone down from where it was, and every other month, Safaricom had been coming down all the way from 45 to about 13, which just happened recently as well. So even if someone was trying to average down their portfolios, I mean, how much could you average? And this is where Chirag and I think there was one Friday evening, and this happened at about 9 p.m. or 10 p.m. And we were like, we've been averaging Safaricom, and how much more are we going to go? Let's look at other options. And this must be 2, 3 years ago. And we started Googling and we started doing this. And then we got a full basket of ETFs from 50 ETFs. Actually, there were many, more. But we entered into the sectors that we would know more. Chirag being very strong in the tech space. I was good at healthcare and stuff. So, yeah, we put our brains together and we took out the best 50 ETFs that we were happy with. And then we broke it down to 30. And finally, we came to about 10 extremely good ones and we invested. We wanted to try it out. So we started off with just $1,000, right, Chirag, per ETF?
Yes, yes, you're right.
Yeah. So we started off with just $1,000 on the ETF, and oh my God, the growth was really good. Mind you, those markets, even if they do fall, it always makes a new all-time high. So when few of our ETFs gave us enormous growth, the others were a bit on the lower side. But what we did was we tried and balanced it out by adding new funds into it, and which gave us, I mean, our returns have been really good, phenomenal returns. There's always a step. I think everyone has to take a step into doing something, get your research done, read about it, look at what kind of ETF it is, what are the underlying stocks which are there, and then decide and get in with a small amount of money so you understand what you're getting into. And then you can always, expand yourselves like the way we have. Over to you.
Thank you, Shima. That was quite interesting how you started off your journey in investing in exchange traded funds. And I know Chirag had mentioned earlier that you do not invest in real estate, and maybe now you can you can take this time now to explain to us the benefits of exchange traded funds, which in comparison to traditional investment products.
Yes. So why I don't invest in the real estate? I'll just give you an example. If I do an ETF today, first of all, I'll be able to touch a lot of stocks that in the markets of the world. So depending on which ETF I buy, it can be the one of the American one, it can be one of India, it can be one of Japan, it can be one of the Europe. So first of all, by sitting in Kenya, I am owning something in America or Japan or in Australia or in say Europe. It's as easy as that. That's one. Number two is that I don't need to pay a lot of all those things that we might have to pay in Kenya, say all those taxes, maybe the capital gains tax that comes with the real estate. And I mean, this is a much cheaper way of doing things, that the costs can be very low in terms of taxes and all the fees that you might pay. So yes, and again, Shima already talked about diversification. And so ETFs, because they have a lot of baskets, they have a lot of securities in one basket. What helps is that, say if one is not performing well, then the others are going to lift it up. So I mean, it helps me in the long run that I don't have to be, you know, looking at it every now and then. And say when the markets do go down, I will still be holding it and waiting for the upside to come. And looking at history and looking at the history of these ETFs, which you can get them online as well, you'll be able to know how certain ETFs have performed during the worst of the worst. Something like maybe in 2008, when the bubble busted for the technology, the tech bubble, and then we had the 2020 COVID. So when people thought that it was the end of the world, someone somewhere was sitting and buying all these stocks, and putting more money in the stock market. And those are the people who are sitting today and saying that, they, when everyone was crying, or when there was blood on the streets, and here there was somebody else who was buying these things. So yes, when it comes to ETFs, we have low costs compared to other traditional products like real estate. I mean, you can imagine, if you want to buy a house today or a plot, how much would you pay to just get that plot? And then when you want to sell it, there's a lot of taxes and fees and all that is involved in that. Another thing that I would talk about is the accessibility, because an ETF is accessible from anywhere in the world. I mean, I say that there is no need for me to buy real estate in Japan when I can just buy an ETF of something to do with Japan, and I'm sitting here in Kenya. So you can imagine how easy it is, like in terms of the accessibility. And then even the liquidity factor, sometimes I always ask my people who are asking me that, why can't I buy some real estate, or why can't I buy this type of financial product? And it all comes to me in terms of liquidity, whereby, say for example, if I want to sell the ETF today, the turnaround time for this is almost about maybe 24 to 48 hours, and my money is open. Whereas when you look at the other side, now imagine you have bought a real estate somewhere and holding it for the past 10 years, and now when you are in certain need of money and you just can't look for a buyer, or if you have a buyer, they're not really willing to pay you how much you want to be paid. So a lot of things that come in this way, that why I would choose the ETF more than compared to those traditional products that we have. Yep.
Thank you, Chirag, for that. And now I have two takeaways from that. You've mentioned that ETFs will enable me to access global markets easily, as well as the interesting aspect of liquidity. So now back to you, Shima. I know you.
Sorry to cut you short. Even the NSE is still T plus 3. So we hope one day the NSE will be T plus 0. You buy and sell on the same day. You can. You can, but it's about getting the funds as well. I mean, not as a cross trade, but you could buy in the morning, sell later in the afternoon, and get your money the next day.
I mean, yeah, Shima, I think you can do that in the NSE, but the only problem that would come with that is the break-even point. Remember, the
Points, yeah.
NSE, yeah, the NSE, once you buy something, the brokerage commission that I have to pay to my broker would be about 1.5% on the buying side.
On
On the
Yeah.
selling side, I have another 1.5. So I need to have broken even at least about 2.5 to 3% before I know I'm in profit.
Yeah, and you can only do that if the market goes up by about 6, 7, 8%, which is very hardly unless there is an announcement and you just got lucky to buy it maybe a day before or on the day of the announcement or something. Yeah, correct.
Yep, yep.
Yep. Over
Okay.
to you, Jos.
I know Shima had mentioned this earlier about the components of this ETF. I know that most of the key stocks in this ETF are based in US, and some of our listeners tonight might be asking themselves, when I invest in this ETF and I'm investing in the global markets such as the US, how is the market there?
Mhm.
You can shed some light on the market performance in the US and also your outlook on this market.
Market in the US, it has been extremely volatile, but that's where the money is. If I look at the Nasdaq 100, it's about 10.2% year to date, and S&P is up around 9% year to date, in spite of the early years of the wars, and I mean whatever happened this year in the beginning, but still the market has come. I mean, Nasdaq, I think in February or so, was it had come down to about 14,000 as well. Today it's back to 23,000 in terms of the index. It's those markets are, driven by solid corporate earnings. There is a very big growing investor confidence as well. The market breadth is really improving, and it's just more about extending beyond the big tech. Like, the main big techs are all based out there in the USA, so that gives an open edge as well, being in those markets. um However, the valuations, I feel they're very elevated at the moment, but market still remains very sensitive to earnings. There are some kind of earning misses or policy risks. The institutional investors are becoming more cautious as well, but they do favor the defensive sectors. So either you buy an index or whatever, you have an entire basket again. Some of the international strategists expect another upside of another 6 to 12% in the next 6 to 12 months, give or take, like supported by AI. The momentum is so strong. There could be potential rate cuts can happen on the third quarter. Their earnings have been very resilient in spite of everything. Look at Nvidia. Oh my God. The results have been phenomenal. Like, what they're making, in spite of all these tariff wars, this plus the top companies have been really, really well. Mm, Again, for me, diversification and selective sector exposure remains key. Yes.
Thank you, Shima,
Over
for
to
that.
you.
I know, Chirag, you've done extensive coverage of ETFs, and maybe some of our investors some of our listeners tonight might be asking themselves, I want to start investing in ETFs. Would you have some recommendation for ETFs that investors can go and look out for?
Yes, I do have some in my basket, which I can already give you. An easy one is like okay, the ETF itself is called the triple QM. It's a ticker QQQM. Yeah, so this one follows the Nasdaq 100, and I think I've been talking, and Shima has been talking about the Nasdaq 100 and the S&P 500. But I'll just take you through that as well. What this means is that the Nasdaq 100 is an index of the America that includes the top 100 companies that are non-financial. So that means that any company that is non-financial and is performing above a certain criteria is listed in the Nasdaq 100. And so the Nasdaq 100 has an ETF called Triple QM, and the fund manager is called Invesco. That's the fund, that the company that has given the ETF. So sometimes you might see a lot of different ETFs that are following the same thing, that is the Nasdaq 100 index, but the fund managers are different. So one of them, as I said, is triple QM. There's another one that I can talk about is the S&P 500. So the S&P 500 has close to about 500 stocks of America again. And these are like, this is a very huge market. You can't compare America, the stock market, to our Kenyan stock market. We have only about 47 to 50 stocks in Kenya, which I think only 5 to 10 are trading. Like, if you want to trade, and that has a bit of liquidity in Kenya. But when you look at the American markets, it's quite a vast stock market there. So yes, the ticker name is VOO. That is VOO. So this VOO now follows the S&P 500. As I said, it has 500, almost 500 plus stocks. And another third one that I can give you is the SCHD. The ticker name is SCHD. Sometimes somebody does not want to look at a growth portfolio. They don't want to look at a growth ETF. They want more of an income ETF. And this is where the SCHD comes, because the SCHD will give you both it has both the income part, and it even has the growth part. So SCHD is by a fund manager called Charles Schwab, and it is a dividend ETF. So the stocks that are listed in this ETF are the stocks that have been giving dividend for a few, like, for the past few years, and they have to have matched or gone above their criteria, the criteria of the fund manager, that is Charles Schwab. So when you look at the SCHD, it gives you income as well, and it even will give you some kind of dividend. So, like, sorry, the income and the growth as well. And like, looking at the Kenyan market, I can say, one of those stocks that are giving us very good returns is something like the Standard Chartered Bank stock, which is giving us about 12 to 13% dividend yield. So yes, Standard Chartered even has growth, and it even has good dividend yield. So this would be for the global ETF. This would be my go-to ETFs at the moment. And I mean, I do have others in my portfolio, but for those people who are listening to me, and if you're just starting somewhere, then I would say that you look for these three at least for a start. Yeah, thanks.
Uh, Thank you, Chirag, for that. Now, if you're an investor, you have some ETFs to start your investment journey with. And maybe you have mentioned good things about ETFs, but Chirag, I'll come back to you and ask you maybe what are some of the pitfalls that investors might find themselves in when investing in ETFs?
Yes, so sometimes, if you have not done your research, and if somebody has told you to buy some ETF, and I always believe in one thing, that whenever you buy something, always do your research. It's not because Chirag is telling you, it's not because Shima is telling you to do this. So you should be knowing that what is the past history of this ETF, what is the past history of this fund manager. Remember that ETFs are it's just a financial name, ETF. But there are so many fund managers out there, so you have to be very careful on which fund manager you use. Look at the past history, look at what it has given as a fund, and on the other side, even now you're looking at how much has it given in the past 5 years, or how much has it given in the past 10 years. And the best I would say is to check when there's blood on the streets. Go to those times when you see COVID. If it surpassed COVID, then then you know that this thing has, it has withstood the thing of the time. Like, if something has been there in COVID and it still exists, that means that it is a very, very, very strong ETF. Because those things that were the ETFs, or those companies that are not very strong, all of them would have been wiped out during the COVID period. And even when we had the recent markets coming off, due to the tariffs and the wars that happened in the global scenario. So yes, yes.
Thank you, Chirag. And now we as investors, we are informed that whenever you want to invest in an ETF, you must do your background check. Check if this ETF has gone through the test of time. And now, as we advance in our discussion tonight, I would like Shima to tell investors maybe what are some of the offerings that AIB-AXYS have in regards to helping investors tap into international markets.
Your key benefits that one would have as an investor would be, again, diversification, exposure to global sectors and geographic, reducing your portfolio risk. The other one is physical ownership. They have just started a direct access to real shares, the fractional shares and the ETFs. These are not derivatives. They're, if you're holding one share of Apple, it's the actual Apple share which is traded in the NYSE. It's very easy onboarding as well. The local account set up with KYC, you just need to fill in a W-8 band form, which is the USA tax form. And funding could be done in Kenya shillings or the USD, of course. Even if you do it in Kenya shillings, it will be changed to the USD. Um, we can give you an expert support. We can give you a guided execution from myself with Chirag and the rest of the people within the firm. There's research insights and dedicated global market desk as well. We can help you out with quite a number of other things. Not to forget that we do have an upcoming feature for the fractional shares, which could be trading. If most of you, if you have used our DigiTrader to trade the Kenya markets, we're trying to see how we can have the platform inbuilt to the DigiTrader for you to trade into the fractional shares, which would be within the US markets as well. Um, Saying this, it's still very ideal for investors who are seeking to expand beyond the local markets with a secure and a well supported platform. We have tried it, we have tested it. I think Chirag and I just opened an account, though we have many accounts, but we did have accounts with the scope market just to know how the platform works, how it's working. We've opened like 10 accounts just to see how the fractional trading is doing, what happens when we buy the ETFs. We've done quite a lot of our due diligence as well. And anything to do, even if you need some exposure, like most of our clients right now, I think we do have one of our other partners who's listening here today, Samuel Washira as well, myself and Chirag. Some of our clients are having a diversification. So if they do have a Kenyan portfolio, we're looking at the stocks. Some of them, they can hold it for a longer term, which would make sense. Some of them are good dividend incomes, yes. Some of them are neither here nor there, whether to hold it or not, then just liquidate it and move it into an ETF or move it into a stock or something that makes, it gives you a diversification of your own. You're not stuck at just one place. You've got many roads which are open for you. You just have to walk one path or two paths, but yes, you've got to come out there and walk it out. And that's how we came up with, I told you how Chirag and I got into this space. And yeah, with God's grace, we do manage quite a number of clients for the foreign, and they've all been happy so far, so good. I don't know, Chirag, do you want to add some more?
No, nothing much really. I think you have really, talked quite a bit of it. So yeah, we have really, partnered with AIB-AXYS now, and all this is being able to be given to you directly from where you sit. And we have even done our site survey on the sense that we looked at other people who are in the market offering such kind of investments. And if you will notice something that AIB-AXYS is the cheapest in the market at the moment. So if you even want to do your research on how much other people charge, and I am very sure that AIB-AXYS would be the cheapest. And just because one thing, okay, maybe I haven't touched, and I'll tell you one secret is that that a small brokerage that another person would be charging you, you might feel that it's a small percentage at the moment, but it really does eat up on in the long run in what you make. Say for example, if you hold a stock for the next, or for the an ETF that you kept on buying for the next few years, then and how much you have been paying in terms of the expense ratios and the commissions, it can really impact your portfolio.
The other thing is, there are quite a number of people who do have such kind of platforms, but most of them do trade on CFDs as well. They do have leverage as well, but that is for very high skilled traders to go on leverage things. For new traders, for new beginners, I would still go with the fractional shares, um, and see the way it works before going for other things like CFDs and likes of those.
Thank you, Shima and Chirag. Now, as we conclude our conversation, I would like to open the floor for question and answer. You can type in your question, and our speakers will be ready to help you out. So I'll give it 3 minutes. We go to the Q&A session. And before that, I would also want to mention that at AIB Axis Africa, we do offer research on local stocks as well as international stocks. So we do have recommendations on a daily basis, which we share on our Telegram and WhatsApp channels. And also, and in next month, we are going to integrate our AIB Trader app, whereby now investors can be able to trade international stocks using our AIB Trader. So if you have any question, you can type in, and Chirag and Shima will be happy to answer you.
Jose, there is one question that I just saw.
Okay.
Yeah, so someone has asked us that thank you very much for this informative session on ETFs. Quick question: I understand that investing solely in real estate is indeed not very liquid. Therefore, what do you think about investing in rates? Yes, rates is a good one, I would say, because the liquidity in rates is much faster than investing in in the real estate. And I would say that if you really love investing in the real estate, yes, you can diversify yourself, have some part of your portfolio that invests into rates. Do your what do you say, like, do your research on that. Especially sometimes I feel that, always go back about 5 to 10 years to see if that rate has really stood the test of time. Because sometimes you might see that year to date or in the past 1 year, because everything looks very nice, the markets are performing well, even your rate is performing well. But when you go now to the back, when you go and back taste your this strategy, you might see that you are better off investing into something else and not this rate. So that's my answer to you, that just do your research. Yes, rates is a very good thing that you can start. Maybe start investing through us into the rates that are available in the offshore markets, and we are here to guide you on that as well.
Thank you, Chirag, for that. There is also another question. I think this Shima can shed more light. Roger of Life asking, can I buy ETF direct from the DigiTrader app? I guess he's asking the new listed ETF.
Yes, yes, you can, as long as you have an account with us, and yeah, so you can buy it online.
Yeah, so Roger, maybe just
Yes, you
even
can.
to just answer that as well. And yes, you can buy online the ETF that is listed in Kenya, the Satrix ETF. However, on the DigiTrader app, however, because this product is very new, and even the type of the product, like, we don't want our clients to do mistakes when they use the offshore offering. So at the moment, AIB-AXYS has just they have just kept it to themselves that yes, you have to place an order with them through their fund manager, and they will be able to buy those ETFs for you. Because of, it's a very different thing. We don't want you to make mistakes while buying, and so yeah, that's why.
Mm. But the local one is fine. You can place it on board.
So if the, as we are eight questions, we can have a recap of what you've covered today and closing remarks. By we can start with Chirag. What would be a closing remarks?
My closing remarks would be like, as we all navigate an ever evolving financial landscape, because it's always evolving, there's always new products, there's so many new things that keep coming and coming. The importance of being informed, you've got to do your research and stuff, be diversified and disciplined. Investment cannot be overstated. Whether you're in local markets or global opportunities, a strategic approach and a grounded research and a long-term perspective, this remains the key to sustainable wealth creation. And let us all continue and make decisions that are proactive, prudent, and aligned with our financial goals, but you have to be very disciplined.
Thank you,
There
Shima.
you go.
Over to you, Chirag.
I think, the first step is to just start. That's my closing remarks. This is to just tell all these people who are listening to us, thank you first for coming and giving your time to listen to us. But I hopefully think that listening is one thing, but taking that to the next level is whereby now you talk to AIB, open your account, get into this market, see how it performs. The more you enter into it, the more you see how it works, the more you'll be interested. And once you start seeing those returns coming, you'll be like, whatever I started some years ago has really made sense. So yes, for me, it's just to tell my listeners today, take that opportunity. Nobody has made money by sitting on the sideline. Take that opportunity, take that risk, start something, even if it's a small amount. But you're here to be guided by all of us, and don't feel that you're alone, and you will reach there one day.
Yeah, and our focus remains on helping everyone grow. And once again, thank you for trusting us with your investment journey. And we look forward to continuing this journey with you and supporting your long term financial goals, everyone. Thank you very much.
Thank you, Chirag and Shima. And I can see that our time We had planned this Twitter space to start at 7 and end at 8. I would like to take this opportunity to thank everyone who spared their time and joined this conversation. It is just the beginning because we'll have more of this conversation where we'll share with you tactics and recommendation on how to invest in exchange traded funds. And my two key takeaways for tonight's discussion is that exchange traded funds offers you accessibility to international markets, as well as there's interesting aspect of the fact that you can be able to invest in diversified portfolio where you have dividends as well as income when you invest in exchange traded funds. And also remember that we do offer a research in AIB-AXYS Africa, where we have recommendation on local stocks as well as international stocks. And also remember, be on the lookout that we'll be having integration completed so that you as an investor, you can be able to invest in international stocks via our AIB DigiTrader app. So that would be my closing remarks. And thank you for joining. May you have a lovely night.